Gem International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is John Rubino, author of several books on the economy, including The Money Bubble. Check out his website, dollarcollapse.com. Welcome back to the show, John.
Hey, Jim. Lots to talk about today, huh?
Well, the Bank of Japan is doing something interesting, and I wonder if maybe this is the death of free enterprise. They are buying up so many equity stocks that within a few months, they will own the majority of shares in Japan's 50 largest companies. Is this really the government taking over?
It's the beginnings of it. You see, governments are so desperate around the world that, they borrowed so much money that they're terrified that they can't handle a garden variety equities bear market. Stocks go up and down. It's the nature of that kind of a free market to bounce around because people are always trying to figure out what the right price is for things, and they get excited or they get depressed, and so the stock market tends to be volatile. And that's normal, and we get through it. Stocks can go down 20% in a normal, well-run economy, and, the impact is pretty minimal. But we are so heavily leveraged in the developed world right now that governments are flat-out terrified that a garden variety regular stock market drop of 20%, which you see all the time, will tip the economy over into something more like a depression. So they can't let that happen, and an increasing number of governments are in the stock market buying up equities kind of indiscriminately. They go in and they buy the S&P 500 equivalent in their country, just the big blue chip stocks, and it's not just Japan, Switzerland. The Swiss Central Bank is one of the biggest holders of a lot of U.S. blue chips. They're a big holder of Apple, for instance, and lots of other brand name stocks as a way of diversifying their foreign exchange reserves. If they just hold cash, that cash gets less valuable over time. And if they hold government bonds, a lot of those government bonds have negative interest rates still, or pretty close to zero, and so they don't earn any money. So they're thinking, well, we get into equities, we make money, and our reserves go up. Well, that only works as long as equities go up, which increases their incentive to keep buying equities. Now, the problem with this is, because it sounds to Keynesians, this sounds great. It's like a perpetual motion machine. The government prints money, buys equities, stock prices go up, that makes people feel richer, they spend more, and the economy grows. Well, the problem with that logic train is that the stock market isn't just there to get people to spend money. It's there to efficiently allocate capital from people who have money to companies that need money in order to invest productively. Now, if you have government coming in with just created out of thin air currency and buying stocks across the board, then that hamstrings the price signaling mechanism of the market. In other words, the market's not sending signals to entrepreneurs about where to invest and to investors about where to put their money. So you get misallocation of capital. All of a sudden, capital just starts flowing randomly to different places. And some of it is good, some of it is bad. But in general, it's not as an efficient allocation as in a free market. So the magic of capitalism, which is, people independently determining where their money goes, and in the aggregate, that creates rising levels of wealth going forward, which then can then be taxed by governments and used for government programs. That process grinds to a halt in the world that we're creating by having governments become huge stockholders. So this is something that, maybe in the short run it makes your Google stock a little more valuable for you. But in the long run, it makes your broad stock portfolio, if you're an individual, much less valuable because this capital is being misallocated. It's not going to generate cash flow in the future, and stocks are going to be less valuable, and the economy is going to grow more slowly, and blah, blah, blah. You get basically something out of an Ayn Rand novel where capital just goes on strike because it's being messed with by government, and it just doesn't know what to do anymore, so it just quits. That's what we're headed for. And so this is an absolutely terrifying precedent that's being set by a lot of central banks. And you've got the U.S. Fed making noises like it wants to join this. We've always bought stocks via the plunge protection team in the U.S., but that's more of an emergency measure to stop an incipient flash crash or something like that. Well, if we just decide that equities are a public policy tool, which is what Janet Yellen has been talking about lately, and no doubt what Trump would do in an emergency, then we're going to be the biggest, most egregious offender in this process. We'll dwarf what the Japanese central bank can do or the Swiss central bank, and so the problems we create will be that much bigger.
What about pension funds? Aren't they also investing in the equity market because they can't make anything from low interest rates?
Yeah, well, pension funds are at least quasi-private. They're not entities owned and run by the federal government. But yeah, public policy of pushing interest rates way down has really debilitated a lot of pension funds because they can't generate, they're set up to generate 8% returns, and that's how they're going to have enough money in the future to pay off their obligations. In other words, to make good on the pensions that people who are paying into the pension plan expect when they retire. Well, if bonds in the aggregate yield you like 2%, you can't get to 8% without taking some huge risks by skewing your portfolio towards equities and junk bonds and private equity companies and hedge funds and, things that will take much bigger risks in the hope of higher returns. Well, pension funds are in effect becoming hedge funds because of this. The government is forcing them to take more and more risk so that, maybe they make some money in the short run when things are going up. But as soon as things turn back down, as soon as equities go down, pension funds are just going to blow up right and left, which is another incentive for governments to never let that happen again. If you're the Fed and you see a normal stock market correction turning into a normal bear market, you run the numbers and see that most of the big pension funds out there are 60% invested in equities, therefore they're going to lose 12 or 15% this year when they needed to make 8% to keep their keep their unfunded liabilities from exploding to levels that threaten the existence of the pension fund. You, as the Federal Reserve Chairman, are going to be that much more incented to go in and buy stocks with newly created currency to keep the pension funds from blowing up. So anyhow, it's a hugely terrible system that we've created right now, and there doesn't seem to be any way out of it because in the normal course of things, we're going to have a horrendous bear market coming up. Every time stocks have hit this valuation level in the past, they've crashed, a 40, 50, 60% decline. But if we can't handle that this time without tipping over into 1930s-style Great Depression, then the governments of the world are going to react in just crazy ways to stuff like this. And the things that they do will make the problems worse rather than better, and by digging us into an even deeper hole by creating too much new currency and borrowing too much more money. And so Jim, we really don't have any way out of this. We're flailing around trying to keep it together through the next corporate earnings cycle and the next bonus season and the next election cycle. But that's all we've got. We don't have a grand plan for fixing this. We just have a grand plan or a little plan for keeping it together until the guys making today's decisions are out of office and can retire with nice pensions. And that's all we've got. So something terrible is coming, and it's just a question of the timing.
Perhaps tie their pensions to reality.
Yeah, if you tied government pensions to some measure of real economic welfare out there in the world, then these guys would act a lot more prudently than they do. Because right now, there's really nothing connecting the people in government to the welfare of the people on Main Street other than elections. And this last election was finally a case of mainstream standing up and telling, or Main Street standing up and telling Wall Street and Washington that they better start paying attention to regular people. So it's possible that this was a wake-up call that will be heeded by government. I don't think they get it. I don't think they really seem to understand. Certainly the Democrats don't. And the Republicans now in office are just doing what governments have always done, borrowing huge amounts of money and spending it on stuff they think is cool, and so we're just going to end up with more debt under a Trump administration after already doubling the government's debt under the Obama administration. Barack Obama, who I like personally, he is a good, reasonable-sounding guy who doesn't seem to have a crazy bone in his body, which is, refreshing in today's world, still borrowed more money than every previous president from George Washington all the way up through George W. Bush in his 8 years, and it looks like Trump's going to do the same thing. So this isn't the kind of thing that can keep on without some kind of disaster happening. So I think that the fact that we're going to accelerate the process brings the day of reckoning forward dramatically.
We'll have more with John Rubino right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with John Rubino. John, the war on cash, the war on gold. Well, it looks like the first shot has been fired in India.
Yeah, who would have thought India would become front page news for the war on cash with everybody else doing what they're doing? The negative interest rates around the world and big-time economists talking about banning cash and stuff. You would think that Switzerland or someplace like that would be the first place where cash is flat out banned and gives us a glimpse of the future. But India, which has its own peculiar set of problems here, is really far out ahead of everybody else. Now, the basic story with India is that they're kind of a cash-based economy, and they have a history of loving gold. What they do is when they get a little extra money, they go out and they buy gold jewelry, and then they give it to newlyweds as a wedding present. But what they're really doing is giving newlyweds money, money in the sense of a store of value. So the families then put this gold jewelry away as a form of savings. That's the family jewels, literally. And the government is bothered by this because, from their point of view, it takes productive capital out of circulation and locks it away. And so the economy isn't growing as fast as they would like it to grow. So what they're doing is, first of all, trying to get people to put their cash in the bank rather than just spend it and not necessarily pay taxes on it. And so they banned some large denomination bills. The idea is that if you want to pay your bills, you need to open a bank account and then write checks or use a credit card or whatever, rather than just handing over cash. And that way the government can track you and figure out how much you need to pay in taxes. Well, that sent the economy into chaos because it's a cash-based economy. So people aren't adjusting right away to the fact that they can't get a hold of these big bills that they used to transact in. And now the government has upped the ante by raiding houses and confiscating what they deem as excessive amounts of gold jewelry. So you're getting this two-pronged war, first of all on large denomination cash, and second of all on gold itself. And it's throwing the Indian economy into absolute chaos. But unless India just melts down from here, it's a sign of things to come, because governments across the world are desperate to pay their bills somehow. They borrowed immense amounts of money, and they got by with that while interest rates were 0 to negative in a lot of cases. Now interest rates are starting to go back up, which means everybody's interest costs are starting to soar, beginning with governments that have borrowed short-term for trillions and trillions of dollars, and now they have to roll over, in the aggregate, several $trillion a year among developed world governments at ever higher interest rates. So these guys are desperate already to bring in money with which to pay their bills because they're all running big deficits. None of them can pay their bills from tax revenues. And now they have to borrow at higher and higher rates. So they're desperate for money. And so what governments do when they get desperate is they start looking around for new revenue sources, and they start confiscating stuff. If something is going up out there in price, they levy a windfall profits tax on it. Or if some group of people are perceived to be paying less than their fair share, then the government cracks down on them and starts basically, taking away their basic freedoms in order to get money from them somehow. Or, if governments can get away with it politically, they just raise taxes across the board. That's the political platform of the left in most countries is that rich people don't pay their fair share. Therefore, when they get into power, they're going to raise taxes dramatically on people who have a lot of money or who have high incomes. And none of this works. People get away from governments. When governments start trying to confiscate stuff, people hide that thing. Or they shift their income in such a way that it no longer is defined as income according to the current tax laws. Rich people can always do this. There are studies going back to the beginning of the 20th century showing what percentage of overall income people have paid in taxes in the U.S., and it hovers right around 20%. Regardless of what the top marginal tax rate is. We've had top marginal tax rates of 75% and then all the way down to 28% at different times during the past century. And yet people pay pretty much 20% of their income to the government. And the reason for that is that when you raise marginal tax rates dramatically, the people who would have to pay those rates just hire, sharp pencil finance guys to figure out how to get around it. And so they end up paying 20%. Year in, year out. And if you lower rates to closer to 20%, then people just don't hire the financial analysts and financial advisors because they're happy to pay 20-25% on their income. It's just not worth the trouble to try to hide it, and so you end up with basically the same income for governments. So it's up to governments to learn to live within those means rather than to try to grow year after year after year in relation to the economy and just increase taxes to keep up with that growth, because eventually the parasite kills the host. And anything above 20% tax take looks like the inflection point at which the parasite begins to debilitate the host and eventually kills it. So anyhow, that's a technical explanation for what's coming. Governments are desperate. They've borrowed insane amounts of money. They have to pay those bills somehow, and they're going to be coming after us, one way or another. And it's just a question of what they choose. There are a lot of historical precedents, and it's not clear what, for instance, the U.S. government is going to choose, or the Canadian government, when they get really desperate and start coming for us. But they're going to choose something. They're going to try some way to get lots more money from us. And we should be prepared for that. And one way you prepare for it is to keep as much of your wealth as possible outside of the trackable financial system. In other words, if you've got some gold and silver coins at home, hidden in a safe place, the government doesn't necessarily know about that. But if you've got a brokerage account with Charles Schwab or Merrill Lynch or somebody, they know exactly what you've got. And they know when you sell it, and they can come back to you and demand whatever they want as a portion of your capital gain or your dividend income or whatever. So keeping your finances as much as possible outside of the surveillance state that's not illegal. It's just prudence when the government is no longer very trustworthy. which, as India indicates, desperate governments are not. They can change the rules on you retroactively and then come after you. So you have to be very careful, and that's going to be one of the big wealth preservation strategies going forward. How do you avoid a rapacious government when that government starts to go crazy? That's a serious intellectual challenge, because there's no way to know ahead of time exactly what they're going to do. Therefore, planning for that eventuality is hard.
Well, the precedent was set back in the 30s when FDR had people, they had to hand in all of their gold. They were allowed to keep their jewelry, but in India, they're not even allowed to do that.
Yeah. Well, jewelry is sort of how Indians own their gold. In the U.S., gold was money at the time. Therefore, we all had gold coins and stuff, or our grandparents did. And so the government could just say, give us back your double eagles or whatever. And we legally had to do it. But you know what? Most people didn't do it. The majority of the gold money that existed in the U.S. was not turned in. And, that's a moral gray area at that point. Do you go along with what's clearly an unjust law, or are you morally justified in not obeying it? And I think that's a personal choice at that point. It's a subjective decision, which a lot of us in various forms are going to have to consider going forward. Because when governments start to lose it, then what is your moral obligation to obey the laws that they pass? If they've screwed things up to the point where the society is basically bankrupt, and then they're desperately coming after people with capital controls and wealth taxes and windfall profit taxes and massively high marginal tax rates and negative interest rates, which is in effect a tax on savers, and inflation, which is also a tax on people holding cash, then what is your moral obligation to tell the truth to the government and always go along with what they say? It's going to be an interesting process as people work this through and try to decide how they want to deal with it. Because stuff like this is coming, Jim. There's no way around most of the world looking a lot like India in the not-too-distant future, not in terms of per capita wealth, but in terms of a government suddenly doing crazy stuff and people having to deal with the consequences of their crazy government.
Does that mean we should be trying to find means then, just in case the government decides that you don't really need that gold bullion, here's an IOU, like California was handing out for their bills? Well,
that kind of stuff is coming in one form or another. The problem is we can't know what form it's going to be, because the government has lots of tools at its disposal. You can fiddle around with marginal tax rates, or you can define income differently, or you can flat out tax wealth. Europe, a couple of years ago, had a lot of serious proposals out there for a 10% across-the-board tax on wealth that they would use to shore up the Eurozone's financial system, and in that way give them time in which to do the kind of integration that might make the euro a viable currency going forward. They were talking about stuff like that. And, it wasn't fringe people talking about it. It was real economists at real universities and people in legitimate positions in major governments who were saying that, maybe some kind of wealth tax would be the thing we need to do. Now, if that happens, and they were also saying, well, you need to spring it on people, and it needs to be a fait accompli when it happens. And then you need to promise to be good going forward. And in that way, you minimize the anger that people are going to feel if you spring this on them and take 10% of their wealth. Well, that's the kind of thing that got talked about before governments were incredibly desperate. 5 years from now, when they are just flat out insanely desperate, just grabbing at anything they can get a hold of, the idea of an across-the-board wealth tax is going to be seriously considered by a lot of governments. So what do you do then? That's just one of their tools. There are lots of other things they can do. So again, diversify, keep some of your money outside of the country if you can. hold things like gold and silver, and you know, I'm hesitant to say real estate because that normally does well in inflationary periods, but it's also stationary and visible. So it's something that can easily be taxed by a government that has decided it needs cash at all costs. so it's not always easy to figure out what works in what circumstance, and then, you know, what circumstance is more likely than other circumstances. This is a tough one. And I think gold and silver held outside the banking system is probably the only thing that is highly likely to come through this in good shape. Everything else has various risks attached to it, and it's not clear what the relative risks are in a lot of cases. You know, is a stock brokerage account at more risk than a bank account, or vice versa? What about a rental property or farmland or oil wells? You know, you just can't know which things the governments are going to come after. But it's a safe bet they'll come after some.
John, thank you so much for chatting with us.
Sure thing, Jim.
My guest has been John Rubino, author of several books on the economy, including The Money Bubble, his website, dollarcollapse.com. You're listening to HowStreet.com radio. If you have any questions for us, you can email us at info@HowStreet.com. I'm Jim Gondry.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.